Hi everyone, I am Musa Abiado by name. Welcome to my channel. In this video, I'm going to discuss about control account. And under it, we are going to look at the two classes of accounts, major accounts you have under control account, which are sales ledger control account and purchases ledger control account. Now, what is control account? A control account is an account that is prepared to eliminate or to limit the discrepancies or errors that may occur in the ledger. Before we go further, let me quickly take you back to what a ledger is. You know, we have different classes of accounts. We have the personal account, which are meant for the debtors and the creditors. And you know, in a business there are many debtors and there are many creditors, and the account of each of the debtors are kept. So at the end of the day, an account is prepared to control the errors or to eliminate the errors or discrepancies that might have occurred in all these debtors and creditors accounts. That's the reason why a control account is prepared, in which the total of the balances in each of these individual debtors or individual creditors will be transferred to the control account. So other name for control account is memorandum account. Why is it called memorandum account? Because a control account is prepared on a single entry basis. It's not in line with the double entry principle. So that's the reason why it is called a memo, because it is a one-sided account. So it's also called a self-balancing account, because after preparing the control account, we can balance it. The total of the control account will be equals to the total of individual account. That is, if we had all the debtors, individual debtors account together, the total will be equal to the total we are having in a control account. Now, what are the types or forms of control account? There are two main types of control account, which are sales ledger control account and purchases ledger control account. What is sales ledger control account? This sales ledger control account is an account used to control or to eliminate various errors that may arise in a debtor's account. Just like I said earlier, what are the source of entries that we used in preparing sales ledger control account? So because of the error, the source of entries in preparing the sales ledger control account is from the day book or source document. So the source of entry can be from the sales day book, which contains the record of credit sales to customer, or the cash book, which contains the record of the cash received from customers or the discount allowed to the customer. We also take information from the return inward journal, which contains the record of the goods returned by the customer. And lastly, we also get information from the general journal, where the record of bad debt that are written off are kept, among others. Now, take down these questions on sales ledger control account as we will be treating this question. The following balances are collected from the account of Abiado Enterprises on 31st December 2020. The balance as at 1st December 2020, 12,000 naira. Credit sales, 76,000 naira. Cash and check receipt from customers, 48,000 naira. Sales return, 16,000 naira. Discount allowed, 5,000 naira. Bad debt written off, 3,500 naira. Set off, 2,000 naira. You are required to prepare the sales ledger control account for the month of December 2020. Now let's look at the solution. So the first thing you do is to draw your T format with the title sales ledger control account or total debtors control account. It is the same thing. You can use either of the two titles, sales ledger control account or total debtors control account. You know, at your left side is the debit side. Then you indicate by writing DR, which represent debit. At your right side is the credit side. You write CR to indicate the credit side. And the denomination, if it is naira, you put your sign. If it is dollar, you put your sign. In the case of the question we are treating, it is naira. That's the reason why we are putting the N sign. Now let's start taking the entries one after the other. Balance as at 1st December 2020. That is called balance brought forward. What does this balance stand for? It means as at the end of the November, which is end of the November, it means the amount that is left for customer to be paid is 12,000 naira. So the balance that remained last month will be balanced at the beginning of this month. So that means customer are still owing us 12,000 naira as at the end of the month of November. So that will be balance brought forward. And remember, for a debtors control account or sales ledger control account, any money customer is owing will be debited. Any amount that will increase their debt will be debited. Any amount that will reduce the debt, that is the amount that the customer is owing, will be credited to the account. That is how account is prepared. So the 12,000 naira is debited into the account as balance brought forward. Then the next entry, credit sales. That is, for the month of December, the credit sales is 76,000 naira, which means it will increase the debt of the customer. So we write sales 76,000 at the debit side. The next entry, cash and check received from customer. So the information is getting from the cash view, which means the customer paid 48,000 naira, which means that will reduce the amount they are owing us. In that case, we are going to credit it into the account. That's cash received, 48,000 naira at the credit side. The next entry, sales return. Return happen when customer returns some goods. So the sales return is also known as return inwards, but when business return goods to the supplier, that one is called return outward. So you should take note of the difference between the two. In this case, return inward, that will reduce the amount of debt of the customer, so it will be credited to the account. Return inward, 16,000 naira. Discount allowed. So before I explain what discount before I go further on what discount allow, what is discount? So you can check my video on the source document for more information about discount. But let me quickly preview what discount is. A discount is a reduction given to customers on the price of goods. Let me put it that way. So there are two forms of discount. We have cash discount, we have trade discount. What is cash discount? What is trade discount? When a customer approach a business and we want the customer to buy in large quantity. Let's take, for example, we are selling notebook and each of the notebook costs 100 naira. We all know that a dozen of notebooks is supposed to be 1,200 naira. But customer comes around to buy just 2 notebooks. Then we introduce to the customer, if you can buy 12, we will collect 1,000 naira from you instead of 1,200 naira. So because of that 200 naira that is being given, the customer may decide to buy a dozen. That 200 naira that is, which is being reduced from the amount, that one is called trade discount. Trade discount is given to encourage customer to buy in large quantity. But in case of the cash discount, the customer comes to the store, he purchases items worth 5,000 naira and promised to make payment at the end of the month. Then the customer left. Then later we realize that we will need the money before the 15th of the month. And the customer promised end of the month. We want to encourage that customer to pay promptly. So because of that, we call the customer that if the customer can get 4,500 by the 15th of the month, that the customer should take the remaining 500. So because of that reduction, the customer now eager, struggle and promptly pay the 4,500 to take the advantage of the 500 naira. That kind of the discount is called cash discount, and that is the discount that appear in the book of account. That is that, like that discount, that one is called discount allow. We allow the customer to remove from the money he is owing us. So the same way we allow discount, business also receive discount from the customer. So let's go back to our question. So discount allow 5,000 naira, which means from customers who are owing us, we allow them to remove 5,000 naira from the money they are owing. So it will be credited to the account. Discount allow 5,000 naira. Next, bad debt written off. What is bad debt? These are debts that the business has decided that they will not be able to recover it again. So there are many reasons why a debt may be written off. Maybe debt of one of the debtors. The debt of one of the debtors automatically, there's nothing we can talk about somebody who has debt. So the business in that case can write off the debt. That means irrecoverable debt. So which means it will reduce the amount that people are owing the business. So the bad debt written off will also be credited to the account, 3,500 naira. So we have set off. What is set off? Set off occur when business use debt to settle debt. A customer is owing us 2,000 naira. We now purchase item from the same customer. Instead of us to make payment for what we are buying, we ask the customer to use the money he is owing us to settle the debt. That one is called set off, and that is what happened in this case. It means set off 2,000 naira. It means it will reduce the amount in which the customer are owing us. Now we'll come to the end of our posting. Then the next thing is to add the debit side. The debit side, 12,000 plus 76,000, that is 88,000. What is the credit side? We had 48,000 plus 16,000 plus 5,000 plus 3,500 plus 2,000. If we look at the two, we realize that 88,000 is bigger. Because of that, we close our account and write 88,000 under the two side. So if we look at it, at the credit side, if we had all the amount, it's not up to 88,000. How much does it remain to make 88,000? So whatever amount that remains, that one will be the balance to be carried down. It means it remains 13,500 to complete 88,000 naira. So the 13,500 will be written as balance carried down. So the balance carried down will now be brought down to the other side as what? Balance brought down, which is our debit side. It means at the end of the December, the customer, the total amount that we have left to be collected from the customer is 13,500 naira. That is all about the sales ledger control account or total debtors control account. So until the next video, when I will be discussing about the total creditors control account or purchase ledger control account, I say you can visit the link that appear on the screen for more details about this video. And also don't forget to subscribe to my channel to receive regular updates about my new video, and like the video, also share it with others to also benefit and get along with this video tutorial. Until the next video we'll be meeting, I said bye for now.